Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of corporate filings before they put us to sleep. Today we're cracking open a proxy statement, which is like the company's version of show and tell, except instead of bringing in a cool rock, they bring in, well, let's just see what they brought. Maybe it's not that boring. This is F&M Bancorp's latest proxy statement. Basically, it tells shareholders what's up for a vote at the annual meeting. Think of it as a cheat sheet, but way longer and drier. The main thing is figuring out who they want you to vote for and what that really means. Mark your calendars, people. May 17, 2025. That's when F&M Bancorp is holding its annual shareholder meeting. At this meeting, shareholders get to vote on important stuff like who gets to be on the board of directors, who audits their books, and how much the top dogs get paid. These are the things that can really change what a company does. First up, they want you to elect 4 directors. These are the people who oversee the bank's strategy and performance. They need to be re-elected to serve for another 3 years. It is Edward Ray Burkholder, Neil A. Hoof, Michael W. Pugh, and Christopher S. Runyon. Next, they want you to say okay to their choice of Elliott Davis, LLC, as the company's independent registered public accounting firm. These are the people who check if the numbers are right. The shareholders don't have to agree with this decision, but the company likes it when they do. Then there's a vote on executive compensation, which is how much the big bosses get paid. This vote is non-binding, meaning the company doesn't have to listen to the shareholders, but they usually do, or at least pretend to. And finally, a vote on how often they should have this vote on executive pay. Every year, or every 3 years. It's like asking the audience how often they want to be reminded about how much the CEO makes. All right, who owns this bank? As of March 20, 2025, there were about 3.5 million shares of common stock out there. Each share gets 1 vote. So basically, whoever has the most shares gets to call the shots. Time to see who has the most shares. Edward Ray Burkholder controls 4.91% of the company, and Barton E. Black controls 5.16% of the company's stock. Mr. Burkholder owns shares by himself and in the company's stock bonus plan as plan trustee. Likewise, Mr. Black controls shares by himself and as plan trustee. The point is those individuals have some serious sway over what happens at F&M Bancorp. But hold on, there's another major player. Fourth Stone LLC owns almost 10% of the stock, so they're the biggest shareholder, at least according to this report. It is important to note this LLC has shared voting power over all the shares. Now let's talk about the executives following the rules. The company says everyone filed their paperwork on time except for a few late reports from Mr. Wilkerson and Mr. Runyon. It happens, but it's always good to double check these things. Let's look at who the nominees for director are. There's Edward Ray Burkholder, owner and director of an engineering company, Neil A. Hoof, who is president of an agriculture business, Michael W. Pugh, who is in real estate, and Christopher S. Runyon, who is CEO of a sign company, and also a member of the Virginia House of Delegates. Okay, time for some corporate governance talk, which is basically how the company runs itself. The board is made up of 11 people and they're supposed to be keeping an eye on things. The company says 9 out of the 11 directors are independent, meaning they don't have any close ties to the company that could cloud their judgment. However, the company does business with several of the directors' companies. The board met 12 times last year. Each director went to more than 75% of the meetings they were supposed to. It is always good to know directors are available and participating. The compensation committee is in charge of figuring out how much the executives get paid. The members are Edward Ray Burkholder, Michael W. Pugh, Daphne S. Thomas, John A. Willingham, and Peter H. Ray. If the board needs new members, the corporate governance committee is the one who looks for them. They consider things like whether the person would represent shareholders' interests, their integrity, and if they have enough time to do the job well. How much do the directors make? They get paid for attending meetings, plus they get stock awards. Michael Pugh, as the chairman, made $54,500. Here's a quick rundown of the top executives who aren't on the board. There's Barton Black, the president, Lisa Campbell, the chief financial officer, Charles Dryce, the chief experience officer, Paul Eberly, the chief development officer, Melody Emsweiler, the chief human resources officer, and Jason Withers, the chief credit officer. Time for the big reveal, how much the top dogs get paid. Let's look at the summary compensation table. In 2024, the CEO Aubrey Wilkerson made about $625,000, which includes salary, stock awards, and other compensation. The president, Barton Black, made around $505,000, and the CFO, Lisa Campbell, made roughly $413,000. That's a lot of money, folks. The compensation is more than just salaries. There are also contributions to 401ks, stock bonus plans, deferred compensation, life insurance premiums, and some personal benefits. Many of the executives get some of their compensation in stock. They are given the stock over the course of 4 years. The table shows how much stock they have unvested. The company has a stock incentive plan where they can issue shares to employees, directors, and consultants. There are almost 148,000 shares available for future use. Okay, so why do they pay the executives so much? The company says they want to attract, motivate, and keep qualified people. They also want to reward them for increasing shareholder value. Executives can also earn bonus based on how well the company performs. This depends on many factors: non-performing assets, net income, total deposit growth, and loan growth. The company has agreements with its top executives. The agreement will dictate what happens if they leave the company for any reason. The Compensation Committee does not take material, non-public information into account when determining the timing and terms of option awards. The company has not timed the disclosure of material, non-public information to affect the value of executive compensation. The company also has a deferred compensation plan where executives can delay getting paid. This helps them save for retirement and reduce their taxes. Every year they may make a discretionary company contribution to the plan. If there is a change in control, that is, if the company is sold, the executives get accelerated vesting of their stock. Also, if executives are terminated without cause, they receive payments as described in their agreements. The company also makes loans to and accepts deposits from its directors and officers. These loans are supposed to be on the same terms as they would give to anyone else. It sounds good. We hope it's true. One of the directors is a partner at a law firm. The company paid that firm $250,000 in 2024 for legal services. These services are obtained at rates that are substantially the same as those the firm charges other clients. Alright, let's get into the pay versus performance numbers. This part shows how the CEO's pay stacks up against the company's performance and the amount paid to other executives. The PO's total comp in 2023 was $964K, but due to adjustments that actually got paid out was $938K. The non-PO average total was $362K, with an actually paid of $352K. In 2022, the average total and actually paid was slightly more, but the totals for the PO were lower. Time to move on to the audit stuff. The audit committee has appointed Elliott Davis LLC as the independent registered public accounting firm. The previous accounting firm was YHB. The aggregate fees billed by YHB for professional services rendered for the audit of the company's annual consolidated financial statements for the fiscal years ended December 31, 2024 was $156,400. The audit committee says they discussed everything with management and the auditors, and they think the financial statements are good to go. So back to the vote on executive compensation. The board wants you to vote for approving the pay packages. Then there's the vote on how often to have this vote on executive pay. The board recommends every year. If you want to make a proposal at the next annual meeting, you have to get it in by December 13, 2024. And if you want to nominate someone for the board, you have to follow a bunch of rules spelled out in the company's bylaws. So what do we think? Well, F&M Bank Corp seems to be doing okay. The leadership structure looks fairly standard, but it's worth noting the connections between some of the directors and the company's business dealings. It is always worth looking at. The executive pay seems high, but not outrageous compared to other banks of similar size. However, there are some risks. The economy is always uncertain, and banks are particularly vulnerable to economic downturns. Changes in regulations could also hurt their business. The competition from other banks and financial institutions is always a threat as well. Overall, F&M Bank Corp seems to be a pretty solid community bank. It is definitely a bank that is pretty conservative, but as always, do your own research before making any investment decisions. Thanks for watching. If you found this breakdown helpful, please like, subscribe, and leave a comment. What do you think about executive pay? Let me know in the comments below.